All right, today we're digging into a really cool classic tool that promises to bring a little bit of order to all that market chaos. We're talking about the Andrews Pitchfork strategy. Let's jump in.
I mean, every single trader asks this question, right? You're staring at a chart, prices are zipping all over the place, and it just feels, well, random and unpredictable. You're always on the hunt for some kind of edge, a framework that helps you make sense of it all.
But what if the answer wasn't some new, super complex algorithm, but a technique that was actually developed way back in the 1960s? A tool that's been quietly helping traders find the rhythm in the market's noise for decades.
So yeah, that's what we're going to do today. We are pulling the Andrews Pitchfork out of the archives to show you exactly why this seemingly simple tool is still incredibly powerful, even for today's crazy fast markets. Okay, so what is this thing? Andrews Pitchfork. It sounds a little strange, I know, but it's a surprisingly elegant way to visualize a trend. So let's break down what it is and where on earth it came from.
At its absolute core, that's all it is. Just three parallel lines. But these lines aren't just drawn anywhere. They are built from key turning points in the price action to create a channel that kind of maps out the expected path of a trend.
And this visual makes it super clear. You've got this central median line, which acts like a magnet or a center of gravity for the price. Then you have the two outer lines that create the boundaries of the channel, acting as your potential support and resistance zones.
So the guy who came up with this was Dr. Alan Andrews. And get this, he wasn't some Wall Street banker. He was a professor who had this belief that market movements weren't just random noise. He thought they followed basic physical principles, like having a center of gravity, which is what led him to create what he called median line studies. And this, right here, this is the whole idea behind the pitchfork. It's the 80% rule. Dr. Andrews found that price tends to come back and touch that median line about 80% of the time. This one observation is the entire foundation for how traders use the tool. It's what gives it its predictive power. So it's really important to get that this isn't just another channel tool. It's actually more like a combination of a few different proven trading concepts all wrapped up into one easy-to-see framework.
Think about it. It clearly defines your support and resistance with those outer lines. It helps you follow the trend by literally drawing the channel for you. And because of that 80% rule we just talked about, it gives you a perfect setup for playing mean reversion trades back toward that middle line. It's just incredibly efficient.
Okay, theory is great, but how do you actually get this thing onto your chart? Well, it's a really straightforward process. It all comes down to identifying three specific pivot points. So to draw a pitchfork in an uptrend, you need these 3 points. Point A is that big, significant low where the whole trend kicks off. Point B is the very first peak the price makes. And point C is the pullback or the low that follows that first peak. And of course, for a downtrend, you just flip it upside down and start with a major high. Let's look at a chart so you can see it in action. Here, we spot our first point, point A. This is that significant low that really kicks off the move we want to analyze. This one point becomes the anchor for the entire channel. From that point, price rallies up to a peak. Boom, that's our point B. Then it pulls back to a low, and there's our point C. Once you have those three pivots locked in on your chart, your trading software does all the rest of the work. And here's where the magic happens. The tool automatically draws that median line starting from point A and shoots it right through the exact midpoint between points B and C. The outer lines are then just drawn parallel to it, starting from B and C themselves. And just like that, you've got a complete Andrews pitchfork right on your chart. So, you've drawn the pitchfork. Now what? I mean, the real power comes from using this channel to generate some clear, actionable trading ideas. And there are really two main ways traders go about this. The first and most common strategy is based directly on Dr. Andrews' 80% rule. I mean, if we believe that price is going to snap back to that median line most of the time, we can build a whole strategy around that very expectation. So here's how that looks in the real world. When the price pulls back and tests that lower line of the pitchfork, that line is acting as support. A trader might see that as a good spot to enter a long position. And the target? Well, you could aim for the median line and maybe take some profits. Or if the trend feels really strong, you could even shoot for the upper line. It creates a really clear risk-to-reward picture. But what about when the price doesn't respect the channel? What about that other 20% of the time? Well, that's when we start looking for the breakout play. You see, a strong, decisive close outside the pitchfork's boundaries is a huge signal in itself.
A break below that lower line could be telling you that the uptrend is failing, and a break above the upper line, that could signal that the trend is actually accelerating and gaining new momentum. Either way, the break itself is a tradable event.
Now, before you run off and start drawing these channels on every single chart you can find, there's a really crucial last point we need to cover. This tool is not some perfect mechanical set-it-and-forget-it system.
There's definitely a science to it, for sure. The rules for how it's constructed are fixed, but there is also an art to it. And the art is that the effectiveness of your pitchfork depends entirely on which 3 pivot points you pick. Choosing the most significant pivots is a subjective skill, and honestly, it just develops with practice and experience.
So let me give you a few pro tips. If your pitchfork looks ridiculously steep or almost perfectly flat, it's probably not going to be very useful. Don't be afraid to adjust your pivot points to find a channel that better fits the price action. And most importantly, never, ever use this tool in a vacuum. Always look for confirmation from other indicators, like an RSI or moving averages, to boost your confidence in a trade.
You know, ultimately, that's the best way to think about the Andrews Pitchfork. It is not a crystal ball, but by giving you this dynamic framework of support, resistance, and that center of gravity, it forces you to ask better questions about the trend you're looking at, questions about its health, its potential, and when it might be about to change. And for any trader, just asking the right questions, well, that's half the battle right there.